Hello everyone, welcome back. Today we are diving into two examples again that illustrate how Turkey's domestic minimum corporate tax will work. We will go through these calculations in detail to understand how companies will calculate and pay their minimum corporate tax under different scenarios. And let's start with the initial conditions and details of example 5. For example 5, we have a corporation, İAŞ, AŞ is joint stock company, which has a few unique financial conditions for the fiscal year 2025. Here are the key conditions for this example. So the company has declared a net profit of 15 million Turkish lira for the year, and it holds 5 million of income from foreign exchange protected deposits, which is exempt from taxation, and there are carryover losses of 5 million Turkish lira from the previous years. And the company is benefiting from an investment incentive certificate that allows a reduced corporate tax rate on certain income. And these initial conditions impact the way the corporate tax and the domestic minimum corporate tax are calculated. Let's walk through the steps here, and you can see the commercial balance sheet profit for the company is 15 million. The company has 5 million exempted as income from foreign exchange protected deposits. Additionally, there are carryover losses from previous years totaling 5 million Turkish lira. To get the corporate tax base here, we take the net profit and subtract the income from FX protected deposits and previous losses. And this results in a corporate tax base of 5 million for general corporate tax, while the minimum corporate tax base remains the full 15 million here. And under the incentive certificate, 2 million of income qualifies for a reduced tax rate of 5% and resulting in 500,000 in tax. The incentive allows a 20% tax rate reduction on 2 million of income and results in 400,000 Turkish lira in non-taken tax. The remaining 3 million here in the corporate tax base is subject to the general corporate tax rate of 25%, resulting in 750,000 Turkish lira in tax. So adding the reduced rate tax and the general rate tax yields a total calculated corporate tax of 850,000 Turkish lira. For the minimum corporate tax, 10% is applied to the full 15 million base, resulting in 1.5 million. After deducting the 400,000, the minimum corporate tax comes to 1.1 million here. Since the minimum corporate tax is higher than the calculated corporate tax, the company will pay 1.1 million Turkish lira as its corporate tax. So now, moving on to example 6, we have İAŞ. We have a different set of conditions that affect the tax calculation here. And you can see here the company's profit for the fiscal year is 10 million. The company has 1 million in expenses that are not tax deductible, and there are multiple exempt incomes and deductions. 1 million income from a branch in a free zone, 4 million from exempted gains on the sale of industrial property rights, and 2 million cash capital interest deduction, which is eligible under Article 10. And the company has 2 million in export income eligible for a 5-point tax rate reduction. And these conditions set the stage for calculating both the corporate tax and the domestic minimum corporate tax here. And you can see the table. The company's commercial balance sheet profit is 10 million, with 1 million in non-tax-deductible expenses. So we have several deductions applied here. 1 million income from a free zone, 4 million exempt gains from the sale of industrial property rights, and we have 2 million here. And for the general corporate tax, the base is calculated by taking the profit, the 10 million, adding non-tax deductible expenses and subtracting the combined deductions. And this results in a corporate tax base of 4 million Turkish lira. For the minimum corporate tax, only the free zone income exemption is deducted, giving a base of 10 million here. And export income of 2 million is taxed with a 5-point reduction from the general tax rate of 20%, resulting in 100,000 as a non-taken tax. And the remaining base here is taxed at the general rate of 25%, leading to 500,000 Turkish lira. The total corporate tax is the sum of the export income tax and the general tax rate, totaling 900,000. So for the minimum corporate tax, 10% is applied to the full base of 10 million, resulting in 1 million. After deducting 100,000 due to export incentives, the minimum corporate tax is 900,000 here. And the calculated corporate tax here equals the minimum corporate tax, so the company will pay here 900,000 Turkish lira as its corporate tax. So in summary, briefly, these examples highlight how Turkey's domestic minimum corporate tax will be calculated under varying conditions starting from 2025. The aim is to ensure a minimum level of tax payment regardless of deductions and incentives. Thank you for watching. I hope this breakdown clarified the process. Don't forget to like, subscribe, and turn on notification for more insights.